So, Tego, let's start with housing affordability. The struggle is real.
The struggle is real.
The struggle is real. You know, interest rates have come down and gone up and come down and gone up. They're still a lot better than they were a couple months ago.
Yeah.
House prices have flattened over the winter.
Yep. Like they normally do.
Very typical seasonality. What's new in housing affordability this week?
The honest answer is not much, and that's the problem.
Right.
That's the problem. So we're here in New Mexico, and this legislature's in session, and they've kicked a couple bills around. Allocating money for not vouchers, but just different programs, grants, and stuff for New Mexico Mortgage Finance Authority and stuff like that. I don't really honestly know exactly where they are right now. And in my opinion, okay, that's fine, but it's a bigger problem than just throwing money and helping people buy homes. There's more to it than that.
Right. Right.
And so, go ahead.
Go ahead.
So shrinkflation.
I was going to say, is it time to use that word, shrinkflation?
So shrinkflation is actually a word that I don't know where it came from in the last few years. It kind of came around, maybe during COVID, near the end of COVID, where things cost the same, but they got smaller. Right. So the classic example is, the bag of Doritos is, yes.
The package is the same size.
Package is the same size.
The weight changed.
Exactly.
It's less Doritos.
It's less Doritos.
We saw that on a lot of products. Yes, for sure. The price stayed the same, but the quantity went down. So what is it with the housing market right now?
Well,
you're saying shrinkflation.
Yeah. So in real estate, so Lance Lambert is, if you're like a real estate, like nerd about data and what's going on in the market, Lance Lambert's the guy to follow. But he just did a story this week, where he talked about housing affordability, and I got to give more to this story. Sorry, there's always backstory to this story.
Right.
More backstory to the story. The backstory is the housing economists and then the doomers, who are the people that are always screaming that housing's going to crash. Say, look at new construction. They're getting cheaper. They're selling for cheaper. They're below, last year. So, prices are going down on new construction. That's where it always starts. It's going to crash there first. Well, Lance, like he does, he just followed the data, and he went to a outfit called Parcel Labs that looks at every property in the country and does a whole bunch of analysis on a whole bunch of different things related to real estate. But what they found is homes got smaller.
Right. So the footprint, the square footage of the home got smaller.
The homes got smaller, which means, yes, the prices did come down. And just to give an example, here in Albuquerque, I did an analysis, a 1-year analysis, and I looked at, I think this would have been 2022 versus 23. And from 22 to 23, the median price of new construction homes dropped about 10%.
The price.
Until you go, okay, well, hey, hold on a second. That was a 10% drop in home prices. Median, though, that was median, which means the middle range, right? Remember our basic math here. That's the median price. But the price per square foot, that's the price you pay per heated square foot of that house, stayed exactly the same. So prices did not go down when you look at it from that standpoint. Yes, they went down, but the houses got smaller. And what Lance Lambert found in the research is that homes got anywhere from 3 to 6% smaller from, what was this? This was from 22 to 23. So shrinkflation in real estate. And the thing is, I remember conversations, 2-3 years ago with where builders, after, that was probably 2 years ago now, after the pandemic and the craziness, and builders were just building as fast as they can, and they just, whatever they could build, they could sell. Builders said, okay, wait, let's take a step back. And then when interest rates bumped up, they said, okay, well, we're going to just start building smaller so we can have a more affordable product, so we can keep the payments in line for people. But at the same time, be able to sell these homes, but at a price point that works for people.
Right. And there were a few of our local builders that really went all in on that and did some very small houses, right?
Yeah, there are. it's just like always, the market is going to respond to what's happening, right? People need houses. We don't have enough homes. That's countrywide. I mean, it's not every single city, but it's definitely here in Albuquerque. We don't have enough, especially, affordable, nice, affordable, livable, safe homes. We just don't have enough of them.
Yep.
And so I just as, because it's Twitter, I pulled up, okay, what you can buy in Albuquerque for $160,000 for a single family detached. I could only find two, and both of them were completely trashed.
They were not eligible for financing.
No, they were cash sale, and it's probably going to take you 50 to 100,000 to make them livable. So yeah, I mean it's unfortunate that's where we are.
So that means there really are none, because if it's going to take 50 to 100 to make them livable, they're going to be over 200,000.
Well, the other thing is, we see condos and townhomes come on the market, right, Tracy, that are maybe in that 200 or under 200, not very often, but there's a catch.
So let's talk about that. So looking for attached homes in Albuquerque area, a lot of times people they do a search and they come up with a townhome or a condo, mostly condos, that they go, oh, good, it's only 190,000. My budget's 200. I want to buy that condo. And as realtors, the first thing we think of is, so what is the other fee? The homeowners association, the association fee that probably covers a lot of things that you have in homeownership, such as gas, electric, perhaps outside of the house maintenance, like stucco and roof and things. But there might be a couple $100 homeowners association that takes that monthly payment up higher than what somebody can actually afford.
Yeah. And
Right.
so, you think about a, $300 a month HOA fee. I don't know what that will equate to. Oh gosh, I'm just going to ballpark it here. So let's say that's, I don't know, that probably equates to $30,000
of extra purchase
price, maybe 40,000, something like that.
All you lenders that listen, let us know. Put it in the chat. Let us know if I bet you're pretty close.
I don't know. It's somewhere in there.
But the thing is, when it has a homeowners association fee attached, your monthly payment is affected by that. So if you can only afford a $1,200 a month payment and there's 300 HOA on there, when you're looking at prices of homes, we need to bring the price of that condo or townhome down that we're buying to accommodate for that. What's sort of interesting about that, Tego, is a lot of times when people are buying homes and using a loan, you don't have to account for gas and electric and utilities when you're putting together your monthly payment to qualify. They're just looking at overall debt to income as well as other things. But people do still have to pay gas and electric and maintenance and upkeep on their home. It's just not a fixed amount every month, like in a condo.
Right.
So,
right.
Anyway, it's hard because we want to help people with home ownership, but we want to make sure they understand that behind the scenes there's extra fee when you're
the key is you got to look at the entire package.
Right.
It's kind of like when we talk about the getting a loan. It's like, don't just look at just the interest rate, right? You got to look at the entire cost structure of that mortgage.
Right.
Yeah.
A lot of people don't think to ask how much do you charge to do the loan. Right.
They just ask interest only.
They ask interest. And, honestly, Tego, lenders that we know and trust that are in our market, they don't just, somebody calls up and says, what's the interest rate today? They don't just start quoting numbers, right? Because that would be a disservice, right?
Well, it would be, first off, dishonest, because there's no way they can do that without knowing your financial situation.
Right. So, and interest rates can change intraday.
Correct.
And it's the type of loan, it's your credit score, it's your debt to income, it's all sorts of things. So, yeah. So, if somebody's going to give you an interest rate over the phone without knowing your financial picture, it's probably not some lender you want to work with.
Yeah. Thanks for watching the video all the way to the end. We appreciate you. And please click subscribe. We'll keep you updated on what's going on with real estate in the Albuquerque area and New Mexico, and of course, across the entire country. Have a great one.